What is going on, investors? Hopefully you guys are doing well out there. Happy weekend. And it is time for the Semiconductor Show here on Equity Empire. If you're new, welcome to the channel. I hope by the end of the video, you consider hitting that like button and the subscribe button. If you have been with us before, welcome back. Hit the like button. We've got a lot to talk about this week. We've got some Nvidia news to cover. We've got a lot of acquisition talk as it relates to Intel. We've got super microcomputer tumbling after the Justice Department released potentially a probe into the company. We'll talk about what that means. And then maybe most importantly, we got earnings this week from Micron. And so we'll dive into Micron's earnings. We'll take a look at not only this quarter's revenue, the profit. I mean, year over year, this thing is looking absolutely fantastic. We'll also look at the guidance, which is also trending in the right direction, not only for Micron, but considering they sell memory to most of these major companies. Well, it probably means demand is going to be strong for the upcoming earnings season, just 30 days away or so, where we'll be hearing from most of these companies. We'll kick things off with Nvidia after it saw its shares rise by about 4.7% this week, up to about $121.40. Now, the AI chip sector has been under pressure and through a little bit of turmoil as well, as you have the current administration here in the United States, the Biden-Harris administration. They've been putting a lot of sanctions and restrictions on which high-performance chips can be exported into the country of China. Now, what China is doing is they are pressuring their domestic technology companies to just push back and say, don't even buy the modified versions of Nvidia chips, which is called the H20. I believe also the upcoming Blackwell version will have a, quote, dumbed down version, maybe a B200 or a B20 version, which will be allowed to be exported into China. Although what we have seen is Nvidia has made modified versions for China, and then the United States government comes back and puts further restrictions on those modified ones. So we'll see what happens. Obviously, we've got elections coming up just a couple of months away here in the United States. It's hard to really gauge, though, which direction they'll go. You have to assume if Vice President Harris is elected, that she'd probably inherit a fair amount of these policies, maybe even a fair amount of the staff that is making these types of decisions, because I think you guys have seen it's not President Biden that is making these types of decisions in the White House, with all due respect to the president. Now, with President Trump, you don't know. I mean, that guy is a complete wild card. What he says, what he does can be two completely different things. So we'll certainly keep tabs on it. But what is interesting is China is telling its domestic AI and technology companies, don't even buy the modified versions of the Nvidia chips. Try to buy the domestic companies that are trying to make copycats or similar type of products. But what is the survey found was most of the technology companies in China realize, and like most people probably realize, Nvidia chips are the best. They are still the best, and they will be the best going forward, even in a modified state. And so many of these China AI companies are saying, no, we're still going to use the Nvidia chips. Probably good news for Nvidia. Now, Apple is dropping out of a race to join the OpenAI funding round. I'm sure you saw it this week. OpenAI changed their corporate governance to go from, instead of being a nonprofit and having kind of a profit arm, it looks like they're going to be a full for-profit company. And a couple of weeks ago, it was reported that Apple and potentially Nvidia as well, maybe other companies, were going to join the latest fundraising round, where OpenAI was trying to raise money at about $150 billion valuation. Now, this is obviously good for Nvidia. The more money that OpenAI can raise, the more servers they can start to spin up, the more products they might be able to invest in. And obviously, a lot of their products have to relate or rely on Nvidia's GPUs. And so what I thought was interesting, this is kind of relates to Nvidia, but kind of doesn't, but Apple dropping out, I think, shows you what their strategy is they will use OpenAI in their latest version of the Apple Intelligence, which I think is rolling out later this fall for the latest iPhones and probably other iPads and other technology that the company has. But I think what Apple's strategy is going forward is they don't want to get married to OpenAI because they want a bidding war in future years, just like they have somewhat of a bidding war to become the default search engine on Safari. Well, they want the same thing to become the default AI engine on Apple Intelligence. So a company like OpenAI and maybe Google and maybe Anthropic, they all three bid to become the default AI engine on Apple. That would be a wildly profitable business. And I think dropping out of this fundraising round for Apple is a smart move for them. Now, the OpenAI project, look, that's interesting that they are projecting about a $5 billion loss on about $3.7 billion worth of sales. So that's an incredible amount of sales for a $150 billion company. We also got news this last week that it looks like Anthropic, which is obviously a competitor to OpenAI, they're trending and tracking to about $1 billion worth of sales this year. So OpenAI over 3 times larger than Anthropic. I don't think anybody doubted that, but the fact that this company is continuing to lose money also shows why maybe they have to transition to a profit-based company system. And also they got a long ways to go until they probably are profitable. Now, moving over to Intel, a lot of news with Intel and a lot of things that I think we can start to connect the dots with Intel as we roll into a new earnings season where we're probably just maybe 30 or 40 days away from hearing from Intel once again. The company started the week at about $22 and some change, up rather large, over 7% to finish the week, close to $24 per share. Now, Apollo Management is said to offer up to $5 billion investment into Intel. Now, Apollo Management is more or less a private equity firm, and they are looking to make an investment into Intel, acquire a chunk of the company for that $5 billion. But I think what people are correctly surmising is that the possible $5 billion investment is really not enough to solve all of Intel's issues. And if you open up Intel's financials, you can really see that. For a quarterly basis, the company is losing from an operating perspective nearly $2 billion. And last year they lost about $1 billion. You pull down to net income and you lost about $1.7 billion. From a cash balance sheet perspective, they have still what I would consider plenty of cash on the balance sheet, but it is balanced off by a fair amount of debt, including $48 billion on the long end and about $4.7 billion on the short end due rather soon debt. Now, where it really gets ugly is when you get down to operating cash flows. For a 6-month basis, the company generated just $1 billion, just over $1 billion of operating cash flow. That compares almost identically to where it was last year. Unfortunately, they're trying to become a chip manufacturer over at Intel, and they spent $11.7 billion on property, plant, and equipment over the past year. So you can imagine this company could get $5 billion, but it doesn't solve any of the issues when it relates to cash flows versus capital expenditures. It certainly doesn't wipe out any or most of the debt that the company has, and it doesn't do anything from a net loss perspective, but it would give the company a shot of confidence. And I think what we're also seeing in some of these other headlines is ARM Holdings, a company that we typically will cover certainly when they have earnings, but also in the technical segment. ARM Holdings makes an instruction set that is found in virtually all cell phones, but it is also making its way server side and into computers these days as well. Apple has been using ARM's designs really for many years in their laptops, and they've been really using it for a really long time in the cell phones. What's interesting is Intel looks like they turned down an approach by ARM Holdings for a purchase of their product unit. We talked about how last week as well, according to the sources that I have been reading, Qualcomm was also interested in the product unit. What's interesting is almost none of these companies are interested in the manufacturing business that Intel continues to build out, but they are interested in the product and the product design team. Intel doesn't appear ready to separate those businesses, but with all of these headlines, you have Apollo coming in with a $5 billion investment that, well, I would imagine that will probably happen. You have the rumors around Qualcomm. You have the rumors around ARM Holdings. I think this is what this is telling us, is that Intel has somewhat of an invisible bid underneath about $20 per share, or right around $100 billion valuation, because a lot of people, a lot of companies came knocking on Intel's door after the latest earnings results, after the company basically fell off a cliff after those dismal earnings. And so it creates a little bit of floor underneath the stock. And so, look, the financials for this company, too risky for my blood. for my stock portfolio. Certainly if other people were paying me to manage their money and I was putting them into the semiconductor sector, I would much rather look at AMD stock, Qualcomm stock, ARM Holdings stock, certainly Nvidia stock before I move into Intel. But for those of you that are watching, you're not me, you're not potential clients that I might be managing their money. You can make your own decisions on these types of things if you believe in the turnaround. We'll also get to another headline where it looks like Intel is going to close on about $8.5 billion of chip funding by year end. That will close the gap a little bit. When we looked at operating cash flows for Intel, it'll close the gap a little bit based on their operating profits versus what they're spending on capital expenditures. That could potentially help the company, but you could also draw the conclusion that this company's valuation has fallen off so much that other companies realize the value of Intel and they step in here right around the $20 or $100 billion valuation. So it creates this invisible floor underneath the shares. And if Intel can turn things around, well, the stock can certainly perform going forward. Now, speaking of going forward, Super Micro Computer had a dismal week. Shares were down about 8.5% to finish the week at about $420 per share. Briefly, they were actually under that $400 mark, getting as low as about $380. This company's problems just don't seem to be going away after the Department of Justice is going to begin a probe. It all relates to that Hindenburg short selling report that we reported on and covered the main details several weeks ago. On top of that, what I think is, look, Hindenburg can do its own thing. I think their report had merit. Sometimes when Hindenburg puts out a report, it doesn't maybe have a lot of meat on the bone. I think the one that they put out with Super Micro Computer was very, very damning. And if a lot of that stuff in there is true, well, this company is basically a toxic waste zone. And what I thought was interesting is Super Micro Computer had to delay filing their annual report, which is their 10K form. This is a form basically covers the financials, the risk factors, covers the company actually in a bigger depth than they do on a quarterly basis, like on a 10Q filing. Well, it's an annual report. They release it once a year. Super Micro Computer was supposed to file their 10K report for the period ending back in June. So we're looking several months ago, this company was supposed to file their annual report. And the fact that they haven't has investors and now the NASDAQ just sent a non-compliance letter to Super Micro Computer. Now, if you cover small caps, if you cover companies that are doing $1 million in business and maybe the whole company's worth $20 million, if you're playing around in penny stocks, these kind of non-compliance letters, these are actually, I wouldn't say common, but you see them fair amount with companies that are fledgling and not doing well. This is incredibly rare for a $25 billion company that is listed inside of the S&P 500. Makes me incredibly concerned that the fact that they haven't listed or issued this 10K annual report. In the past, I have covered other relatively large companies that had to delay filing a 10K annual report, but usually you get it like a couple of weeks later after the delay at the most. This is stretching on for a long time. Makes you wonder what will happen when this 10K report actually gets released. And I tell you what, when and if Super Micro Computer finally releases its 10K, we'll be going through it in depth, and you better believe the rest of Wall Street is going to be going through it in depth. And that could be another actual leg down for SMCI. So you've got a lot of risk going forward with that one. Now, speaking of maybe no risk, is Taiwan Semiconductor, as they just dominate the semiconductor manufacturing business, and it saw its shares rise this week as it started at about $174, up over 2%, finished the week close to $178 per share. This came out over the past couple of weeks. Thought this was an interesting story. So Apple's A16 computer chips, which are actually more or less cell phone chips, those debuted 2 years ago in the iPhone 14. Well, the facility that Taiwan Semiconductor is building in Arizona is already being produced in, quote, small but meaningful quantities. Even though these chips were debuted 2 years ago, you would still consider these chips more or less kind of the leading edge of manufacturing. So the fact that the Arizona plant, which really hasn't been scheduled to be at full scale capacity until the first half of 2025, is already producing these chips in meaningful quantities, that's not only good news for TSM, it also shows you how much experience and knowledge and expertise this company has, that they can come all the way here to the United States, build a brand new facility from the dirt up, and already be producing leading edge chips. This is why you look at Intel. This is why you look at other fabricating companies and just say they are behind TSM. This company is absolutely a powerhouse. They are the Michael Jordan of the business, and I don't think that's going to change anytime soon. Now, the question is what is Apple going to put these 2-year-old chips? They're certainly not going into the brand new iPhones that people are buying now, but it could go into a next generation iPhone SE, which is a lower price phone that the company manufactures, potentially other iPad models as well. Could be a new product coming forward through Apple using a 2-year-old chip design. You got to imagine the profit margins on a 2-year-old chip design also relatively high as well. And they're manufacturing right here in the United States. Congratulations to TSM, and congratulations a little bit to the federal government. This is the type of spending that has a long-term payoff. And if we spent our money like this wisely and invested in these types of companies as a taxpayer here in the United States, we'd probably all be a lot better off. Now, moving on to Advanced Micro Devices, saw its shares also rise with the broader markets. Started the week at 155, up over 5.6% to finish the week at about $164 per share. Oracle giving good news to AMD and their MI300X accelerators, which is more or less a GPU competitor to Nvidia's H100s, also moving next year into Blackwell. I think we're getting the MI350, maybe MI400 as you move into next year. Oracle Cloud is using the AMD accelerators in part probably because they can't get a full allocation or enough of the Nvidia ones as well. Now, in terms of data center revenue, what does this mean for AMD? Well, look at over the last year, guys, $1.3 billion of net revenue on the data center side. This is all more or less a lot of the growth is going to be these M300 accelerator chips. Well, look, you went from 1.3 billion up to $2.8 billion. Look, they give you quarter over quarter view at AMD from 2.4 up to 2.8 and a quarter. Not only that, look at the operating income growth here from 147 to 541 million up to $743 million. If you continue that kind of track, you are likely going to be over $3 billion, meaningfully over $3 billion in revenue, and potentially $1 billion of operating income on a business unit that was doing just north of $1 billion of revenue this time last year. AMD, when they report their earnings in a couple of weeks, this will be basically the first number that most investors come down, and I just showed it to you, so hopefully you are ready when AMD reports their earnings. Now, speaking of earnings, company that reported this week was Micron. Started the week at 94, and guys, pat yourself on the back if you got in on this one. Up over 14% as Micron finished the week at 107.50. The company announced their Q4 earnings. More importantly, we got Q1 guidance as well. Revenue in the Q4 came in at $7.75 billion. That beat expectations by about $100 million. They really beat on that earnings side. I'll show it to you here in a minute. That was 93% growth year over year on that revenue side. Now, we also got Q1 guidance, and this blew it out of the park. $8.7 billion worth of revenue. At the time, the consensus was closer to 8.2. You have to imagine when these companies announce this guidance, they give plus or minus a $200 million cushion one way or another on the revenue. Typically, they like to come to the high end. It is possible you might get $9 billion worth of revenue. So year over year and even sequentially, That's quite a growth for Micron. And inside of the conference call, which I read through, they are still ramping up their high bandwidth memory. High bandwidth memory surrounds all of the Nvidia and AMD GPUs that are making it into these data centers. And the Blackwell is scaling that up even more. SK Hynix said they are reaching further ramp of their high bandwidth memory manufacturing, and Micron also filling a lot of that need. When you look forward on the forward estimates, now the forward estimates, when it was reported earnings, this was a couple of days ago on September 25th, the estimate, like I said, was for $8.2 billion. Micron said that they're going to come in at $8.7 billion in the Q1. Now the consensus estimate on Wall Street is for $8.7 billion. That would be 84% growth year over year. And then you got a revision higher on the subsequent quarters. $9 billion, $9.75 billion, up to $10 billion by this time next year on Micron. And I tell you what, the way things are going, it potentially the $10 billion mark could actually come a little sooner than you think with Micron. And these financials are absolutely fantastic, particularly if you compare them to a year ago. Micron had just $4 billion this time last year, but look at your cost of goods sold. You had actually negative gross margins at Micron. You see this occasionally in the semiconductor industry. This is why I always urge to take some profits on some of these companies. Now, you don't have to sell your entire stake, but I do like to take profits on semiconductor companies because when they're hot, they are hot. And when they are cold, they are colder than dry ice, because look at your cost of goods sold last year. It was $445 million, which basically means you were selling every single product at a loss. It is completely turned around this year. $7.8 billion in revenue, just $5 billion on the cost of goods sold. So you grew your revenue year over year by 93%. But look at your cost of goods sold. It went up by less than $600 million. So your gross margin exploded up to $2.7 billion. Last year, it was obviously negative. What also is very nice about this company is they've controlled the rest of their costs. Look at your research development, up to $903. Last year was $719. Even your selling, general, and administrative, you grew your sales nearly 100% over the last year, but your selling and general administrative went from $220 up to just $300 million. So your operating income is just going to explode. From a negative $1.5 billion last year to a positive $1.5 billion this year. Even last quarter, you had operating income of just $719 million, which is not even half of where you were this quarter. So that's what gives you confidence. When Micron says, hey, our upcoming quarter, we're going to do $8.7 billion in revenue. And Wall Street is saying, hey, we're going to get to a number closer to 10 here very soon. And the company is maintaining their research and development fees in relation to how much their earnings are growing. Their sales and marketing spend actually doesn't grow in relation to the revenue. So a lot of that revenue growth that Micron is projecting, a lot of it's going to show down here in operating profits. And a lot of it will show up down in the net income side of the business. They've got plenty of cash. They actually have plenty of inventory as well. There was a question or two as it relates to that on the conference call. Doesn't seem like anything to be overly alarmed with there, particularly as those sales continue to move higher. And on top of that, you have the increase in margins, particularly over the last year, but even quarter over quarter as well. Long-term debt sitting at just $13 billion. It makes that Intel number closer to 50 look even more scary than it already is. And here's where the beauty shines with Micron. You get a year-end cash flow number. Last year, you had year-end cash flows of just $1.6 billion. This year, it exploded up over $8.5 billion. Financially, this is probably going to be one of the best years going forward for Micron. Now, they spend a lot on property, plant, and equipment, $8.4 billion. That was more than a year ago. But this year, they paid down a little bit more debt than they took on. They still were able to pay a little bit of a dividend, and they bought back a handful of shares to offset a little bit of the stock-based compensation. Now, this is not Nvidia. I wouldn't even say this is AMD, but these financials are showing a very, very high-quality company that has a high-quality business model, and as memory continues to be red hot and in demand, well, this is one of three companies in the world that basically sell it. Now, moving over to the technicals, these are going to look absolutely beautiful. The SOXX ETF found footing and support right at a logical area. These trends are still intact. Now, the question is, will you stall out in the middle of the channel, which these things can do, or at least find some resistance here, or will this trend continue on and will make a new higher high, which means the SOXX ETF will get above 267 sometime probably by the end of the year, maybe even potentially over the next 60 days or so, as most of these companies will report earnings. And if they look anything like Micron, well, you're likely heading for a new high there. The SMH looks destined to at least retest the highs that we made back in July up here at about 280. So we've got a lot of headroom left on that one. Nvidia, slightly little different condition, but when you look at Nvidia in this sense, it is still looking absolutely beautiful. In the shorter term, though, with Nvidia, you would like to see us confirm a new higher high, because our high is all the way back down here in June. We made a lower high in July, made another lower series of high in August, and we've just finished confirming, or at least putting in, another lower high back in September. So with Nvidia, you would like to see this push at least over this cluster of high at 129. I mean, we're not far at all with Nvidia being at 121. You'd like to see it push back into the 130s. Ideally, you'd like to make a new higher high, or at least take out these highs at 135. If you do that, I think this trend is absolutely intact. It's just when it continues to show up. Now, Nvidia is a little bit different. They don't report their earnings when the rest of these companies will do it. Tends to be kind of the second, third, maybe even the first week of November. We won't hear from Nvidia all the way until likely the second, maybe even the third week of November. One of the last companies out of this group to actually report. In fact, it probably is the last company. Now, AMD broke above a key resistance area, very similar though to Nvidia. We've still made a series of lower highs, but we have actually not confirmed a series of lower lows. That gives me confidence that we probably can break out above that. If we do, AMD could retest these areas up here at 211, and considering we're at 165 on the stock, you've got plenty of upside there. Broadcom, probably looking like Nvidia, just took out its lows, or its low high that it made back in August, but notice we continue to make a series of higher lows on this one. This purple trend is intact. The longer term trend is intact with Broadcom. The only thing you're hoping for is actually a deeper pullback, so you can step in there with a lot of confidence. With Intel, we'll switch it up to a weekly view. We've certainly found footing down here at $20. We talked about during kind of the fundamental news section that you saw a lot of buyers, Qualcomm, ARM Holdings, Apollo Management, private equity firms are stepping in at this valuation. It's telling you that they must consider that a smoking hot buy, considering how many of them lined up and how many were rumored to step in at this level. Now it will be up to Intel to deliver. If it remains a standalone company, if they have fabricating and design under the same roof, they've got to be able to execute that. It's going to take a long time and a lot of challenges ahead, but at least in the shorter term, you've had some footing in the stock. Qualcomm is still looking absolutely beautiful. We've just confirmed another higher high. We're consolidating here in the middle of the range. You're looking for actually larger pullbacks before you move in on Qualcomm. Taiwan Semiconductor looks absolutely sensational. Just made a new higher high. We're now hovering at that level. Pullbacks in that stock absolutely can be bought. ASML, which makes obviously all the lithography machines that go inside all of these fabricating facilities, that also confirmed a new higher high. We're in the middle of the channel. These are areas where, certainly when we get to Micron as well, you'll see the middle of the channel can be an area where you can buy that one if you want to add to a position or start a position. NXP looks just fine. It's been making a very, very repeatable series of higher lows. It is just kind of bottom there. If we continue to move and march higher with this one, you could get into the $300 range, go from $250 to $300 on that one, probably in relatively short order. ARM Holding, as we talked about last week, we switched it to a daily view. You have now retested and kind of butted up on supply over here in this range, about $150 per share. The stock sold off once it hit this range back in March earlier this year, but then rallied to a new high. I think the momentum's probably on this one. This one looks like it probably wants to retest these areas up here at 180. That'd be another $30 higher. You won't hear from ARM Holdings until about the first week on the earnings side of November. SMCI, still a little bit in no man's land, but this is not the trend you want to see. Obviously, I mean, I'm not breaking any news here, but this is a very clear and well-defined downtrend. A downtrend is a series of lower highs and lower lows. Both are being confirmed. As I showed you with maybe like a stock like Nvidia, you are making lower highs, but the lower lows are not being confirmed. That's why you have to assume when that is the case, when you have a divergence there, what I tend to revert to is what is the longer term dominant trend. The dominant trend tends to play out. With SMCI, this is still very, very ugly. Now, you will have support for the stock underneath down here in the $300 range. I think it's almost assured that we continue to walk down into this $300 level, and there will be decision day. Can the company announce its annual report? Can that not go through a ton of Wall Street and potentially Department of Justice scrutiny? Because that 10K is going to be scrutinized with a fine-tooth comb. If the company can't do that, now I know we're on a split adjusted basis here pretty soon with SMCI. In fact, I think it's Monday. This one will revert to a 10-to-1 split. So the price you see now at about $43 or $430, that'll actually be $43 or $42 heading into next week. My call is this one probably reverts back to the longer term trend, probably in the $150 level or a split adjusted level of 15. I think we'll head there maybe potentially by the end of the year. Dell Computer actually looks really, really good. They're probably benefiting a little bit by the fact that Super Micro has fallen on its sword a little bit. Technically, there's no clear signs here, but the trend with this one is certainly higher. Micron is a great example of why we divide these longer term trends that we're in two. So I tend to put kind of a lighter green line in between the middle of these channels. The dark green line represents like, hey, if you don't buy now, like, I don't know what you're doing. As an investor, if you can't buy the bottom of, in the case of Micron, you're looking at like a 15, 16-year uptrend where the bottom of the channel has been tested just a handful of time and immediately found footing and support. If you can't buy the bottom of the channel as an investor, I would turn your money over to somebody else and let them manage it and let them put the buy button when it gets down to that level. Now, that's always hard to buy down at these levels. Back in 08, it was a great financial crisis. In 12, it was probably something else. And in 16, it was probably something else with Micron or the sector or the overall economy. But you had to step in there and buy. That's why I divide these channels in two. It's a little bit easier to buy the middle of the channel. The news isn't always as bad as it is when you get to the bottom of the channels. And if you did step in on Micron somewhere in the middle of this channel, you are rebounding. I think this one, based just on the fundamentals and the technicals, you make a new higher high on this one, which means you still have plenty. I mean, we're talking plenty of upside. This thing's sitting at 107. We'll just, to make the math easy, we'll call it 100. This one could go up another 60%, 50-60% from here, back up into the 160s, and really just be completing a 15-year pattern from a technical perspective. Now, Lam Research bounced off an area that we thought it probably would. It'd be this dark green line here as well. I guess you could put kind of the top of the channel on these as well, and you could divide this one in the middle. Looks like we're working our way up to that level. Lam Research also probably could be bought even at these levels. And finally, Applied Materials looks pretty darn good to me. We're over and above channels where I'd be like rapidly excited about, but we did find footing. This is also why we divide these channels in two, because rarely do you get a chance at the bottom. That's why when you put these channel lines on and your stock hits it, you have to step in. I'll bring up an example. Nike is probably a great example of a stock that more recently has been on a 24-year uptrend. And in 24 years, you've had like 6 times to buy it at the bottom of the channel, where here you were back earlier this month, you hit the bottom of the channel. So you better believe what I was doing in all of my accounts. I have short-term accounts, long-term retirement accounts. I've held Nike stock for not since 1989, but I've actually held Nike stock, believe it or not, since 1997 is when I first bought this stock. So somewhere in here, it was $7 or $8. I bought shares of Nike, and I was a middle school student, and I bought $1,000 worth of Nike stock at about $7 per share. And believe it or not, and I still have those shares. And so you can believe, after all the splits and the dividends, the dividend raises, how much that stake is worth, and why I can get on here and post financial advice for free, because back in 1997, I bought a stock not at the bottom of the channel, but you can see the power is, if you do, when these things get to the bottom of the channel, you've got to move. And we are seeing some of these stocks get there, and Applied Materials is not there, but when they do, you got to pull the trigger and you got to move. Folks, we've also got to move on from today's show. That was the Semiconductor Show for Saturday, September 28th. Consider subscribing to the channel if you haven't. Hit that like button, certainly if you've made it all the way through. I have a link down below as well to the Equity Empire newsletter. All of this is completely free. It's free to hit the subscribe button, free to hit the like button, and it's free to subscribe to the newsletter as well. There's actually a team coming on board to Equity Empire, so you will be getting more than just my face, which may need some moisturizer or some sunscreen at some point. You'll get more than just me reporting to you here on the channel. Hopefully you guys enjoyed today's video. Have a fun weekend. If you watch football tomorrow or spend time with the family, have a great time. We'll see you next weekend. Good luck with your investment.